who got particularly pummeled in the last couple of months? Who did so badly that they just stand out and probably deserve to go bankrupt or something?
Well,
who goes first?
I hate saying somebody deserves to go bankrupt.
Nobody deserves to go bankrupt.
It sounds so harsh.
Yeah, some people deserve to go bankrupt.
Taylor's.
If you believe what Saudi Arabia said the other day, he's like, what did he say at that conference? He was in Houston. He's just like,
he said lower costs,
or
liquidate.
get out.
Yeah, basically.
Yeah.
Thank you so much for that sound economic principle. Anyway, all right. So who's up first?
I guess I will start. And one company that did really, it's been kind of one that we've talked about in the Motley Fool universe for a while. I do know it was a Motley Fool recommendation
a while ago.
For a little while, is Ultra Petroleum.
They're nat gas mostly.
They are a natural gas
Don't let
player.
the name fool you.
Don't let the name fool
Right.
you.
Mostly involved in what's called the Pinedale Powder River Basin area up in Wyoming. It's a very low cost, low decline, kind of conventional natural gas area.
This is why they were a fool pick. They were the lowest cost
Right.
natural gas producer.
Sounds like a country club.
Yeah.
Pinedale.
Yeah. But the reason that they have struggled so much is because they were levered out the nose. I mean, they just had a debt load that was, even 3 or 4 years ago, looked unsustainable. Even when gas prices were doing pretty well, everyone's like, you guys have a pretty high amount of debt on the balance sheet. What are you going to do about that? And as we've seen over the past, I think actually this was a quote from management. It just basically gives you an idea of what's happened. He says, "We had net debt of about $3.4 billion, which has been fairly consistent since 2014. However, we have had EBITDA of approximately $800 million in 2014, $600 million in 2015, and forecast $300 million in 2016. So basically, they're saying that we're kind of
off the
losing
top of your head, do you know what they're costing? Because nat gas is like at $2 or whatever. So do you? Any numbers come
They're
to mind?
right around there, actually.
Okay.
Here's the issue though is we've talked about them being the lowest cost, which is great. Here's the other problem with it. It's all the way up in the mountains of Wyoming. And because of that, and all of those like gas hubs like the Barnett Shale in East Texas, and you've got Anadarko Basin right in Oklahoma, those are much closer to the demand sources. And so the transportation costs down to the Gulf Coast, where most of our natural gas is consumed,
Every pipeline winds up in Houston. So
is a lot less expensive. So the differential price that Ultra Petroleum is going to get because of that high transportation cost, their realized cost for actually selling it, or realized price, is already baked in lower. So you can say that you're the low-cost producer, but then you also have to accept the fact that you're not going to get as robust of prices as everybody else.
Man, all right, Taylor, who had an unfairly rough last couple of months?
I don't think they're going to go bankrupt. Let's go ahead and prequel my
Is
comments.
Ultra bankrupt?
No,
No,
not yet.
they're almost-
They're talking about
Okay.
restructuring.
They're
talking bankruptcy as an option.
There was a lot of talk on the conference call about
Strategic alternatives.
strategic alternatives and negotiating with our creditors.
Yeah.
I'm gonna make anyway.
Marathon Oil. According to Market Watch, first time in 20 years that it failed to turn a profit. So not that great for a full year of 2015.
Because a lot of the other major big name whatever oil companies, they're still profitable.
They're still profitable, based on their metrics. But they're also cutting spending this year, 2016, by a little over 50%. So they're still feeling the pain, cutting workforce by 20%. But the big thing here is that of that money that they're spending in 2016, 70% is going towards shale. So they're leaving very little room to spend on long-tail projects, which is going to be the growth that you're going to see in 5 to 10 years. So I think that they're short-changing themselves by spending all this money on money. I mean, because they need to, right? They need these upfront cash flows in order to sustain capital, because they're already spending more than double their cash flow, right, on their capital expenditures in 2015. They're expected to spend more than they're going to bring in 2016. So they need these immediate cash flows, and that's unfortunate because in 5 to 10 years, what are shareholders going to have to hold on to? They're not going to continue to drive huge growth from shale for 15 more years. They're going to need these deep water projects. They're going to need these projects that don't require fracking and CO2 injections and water flooding. They need big projects, and they're not spending on it right now.
It's kind of interesting because ConocoPhillips did the exact same thing when they announced their earnings a little while ago. Is they are moving very, very far away from their deep water exploration, deep water development project.
And those
and
are
their
the low
focus,
cost, long tail things that you kind of want.
I wouldn't say deep water is necessarily lower cost.
Well, it's big upfront costs, but
Right.
later down the line.
Yeah,
You have
lower your
lower
production per
decline
barrel,
rates,
yeah.
so you have a more consistent
Because
cash
what's
flow.
the decline? It's like 2 or 3% on those things.
A little higher than that.
Okay. Anyway.
But it's not 70%.
Yeah,
the
it's
first
not.
year.
It's
not
not
shale.
shale.
Yeah. Cool. So my company is not an oil-related company at all, but it is your friend and mine, Solar City.
Yeah, I think the two of us are going to look at you very, very attentively here because you have two shareholders in Solar City looking at you right now. So
I swear I did not do this just to kind of.
he's doing it just to
Doom and gloom.
Yeah, I'm sorry. Anyway, you guys know full well. I just couldn't believe that this happened. But basically, I'm referring to the Nevada ruling that changed the rules for net metering within the state. It basically made rooftop solar uneconomic, and they did it retroactively. As I understand it, this is not a permanent decision. Could get changed in the future. Solar City obviously just bet the wrong way on this, and they just did not need this right now.
I mean, not only did they, kind of, I wouldn't say bet the wrong way, but the minute
The ruling came out.
they basically fired everybody in the
It's
state.
like,
of
all right, we're
Nevada.
leaving.
I mean, that's it. Yeah, they picked
They
up
left.
It's so. I could not. When I heard that, I was like, wow, this is really a big deal because they're.
well, it shows you that they're
This is
nimble,
Nevada.
right?
Right.
If there's a
They're nimble.
state in the United States of America that's perfect for solar, it's them
You
in
would
Florida.
imagine.
Like, I don't know. Anyway,